Hello and welcome to the BVCA's webinar focusing on GPs in a digital age, the forward-thinking CEO. I'm Sarah Rajeswaran, Director of External Affairs here at the BVCA, and I'm delighted to welcome you to today's webinar. And I'd like to extend a huge thank you to Intertrust Group for sponsoring today. If you have any questions for our speakers, please use the comment box within the dashboard on the right of your screen, and we'll come back to you via email after today's event. Moderating today's panel is my colleague Leon De Bono, Assistant Director General at the BVCA. Leon, over to you.
Good afternoon and a warm welcome to this BVCA webinar. GPs in a digital age, the forward-thinking CFO. We live in a world that is rapidly changing, being accelerated and amplified by COVID-19, a world that is changing socially, economically, environmentally, digitally, politically, and so on. And this all means new challenges for portfolio companies, for fund managers, and for institutional investors too. And the CFO sits in the midst of all of this and not only has to make sense of it all, but harness a wealth of information, digest it, decipher it, and then present it. And not only that, but in forward-thinking ways. And so we're delighted to host this webinar with the support of Intertrust this afternoon. And I'm delighted to introduce our forward-thinking CFO, Tony Robertson, partner at SEP, and the insightful Edwin Chan, Head of Funds Business Development at Intertrust. Good afternoon to you both. And perhaps, can I come to you first, Tony, just to introduce yourself, first of all?
Thank you, Leon. I'm very happy to be here. Yes, I'm Tony Robertson, one of the partners at Scottish Equity Partners. I've been there for 10 years. Prior to that, I trained and qualified as a chartered accountant with KPMG and then spent 25 years in various CFO and COO roles in growth technology businesses. So just want to say that SEP is a UK-based growth equity investor with over 20 years of investment experience focusing on high growth technology businesses across a range of sectors, including software and consumer internet.
Thanks so much, Tony, and a wealth of experience to bring to this discussion. Edwin, can I ask you for your introduction, and thanks again for your support today.
Thank you, Leon, and I look forward to this discussion with Tony later on. My name is Edwin Chan. I head up business development for the fund sector Intertrust Group based in the London office. Intertrust has over 4,000 experts spread across 30 different jurisdictions, covering the full life cycle of a private capital fund, from the portfolio company level accounting all the way up to the fund administration, depository, and AIFM services. We also help our clients, especially in this current age of increased regulatory demands for local substance. So that includes corporate services, independent directors. I've been in the industry for over 20 years, having spent over 8 years as a global head of fund accounting at Wells Fargo, and also as a European CFO for hedge fund and PE manager, running around 12 billion AUM. And anecdotally, one of the key things I want to bring out in this conversation is the digitalization of it. And one of the amusing things that happened to me when I was a CFO was that one of my portfolio managers decided to go and buy a wind farm in Brazil. And this was back in 2008. And I'm going to show my age now and talk about a flip phone. He then came back to England from Brazil, and I asked him, okay, I need proof for governance purposes that we bought that wind farm. He opened his flip phone, showed me the grainiest photo I can ever recall of him standing in front of the turbine, and asked me, is that sufficient? Obviously, it wasn't, and I hope that during this discussion, we talk about more about the governance side and how we can use digital tools to help us with that.
Brilliant. Thanks so much, Edwin. Times have changed, clearly, and you bring a wealth of experience to this discussion too. Tony, coming back to you, perhaps we can start with you, the role of the CFO. I mean, what's changed? What is changing?
Yes, indeed. I mean, I think we all know that the role of the CFO, both within an investment firm, but also in a broader sense, the company's portfolio side, has evolved way beyond the traditional finance functions. I can't actually remember when the CFO role has been so pivotal or subject to so much innovation and change. It's really becoming quite an important partner to other lines of the operation. I think really the strategic priorities, Leon, are coping with growth and then looking at areas such as innovation and talent on how to address this. So of course, financial and accounting skills have always been important and will continue to be, but actually technology and innovation has now become really essential. And of course, this is also the same across the portfolio and an industry in general. And we as a firm are no different to this. I believe that data management is central to this, and that really the CFO is becoming the custodian or the guardian of the most valuable asset in most organizations, which is data. And really it's that role that's taking more responsibility for how to leverage that data, but also how to benefit the firm and of course the portfolio of companies. I mean, my view is I think the main drivers behind this are there is a real increase in demand for data from both LPs, but also as the funds under management expand, and also the profiles of the LP base changes as well, introduces further dimensions. I mean, the growth in fund sizes, the expansion of portfolios, both in terms of size and different geographical locations, have driven the need to really embrace technology and innovation to cope with this. So we need to really try, what we try and do at SEP is maximize our own team's efficiency and productivity as part of this. I mean, we are, after all, a growth technology investor, so we should do as we should do as our companies do. I think the other thing too, actually, is that the deal and portfolio executives are becoming increasingly busy. So the CFO is taking on much more responsibility and evolving beyond finance into a number of areas, actually, such as data protection and resilience, digital strategy, and also an area that's close to my kind of heart, ESG and responsible business practices. So the role is much more operational now than it's ever been. There's a greater interaction with the portfolio as well as within the organization, which we'll touch on later. So there's lots of synergies and sharing of best practice that we do at Scottish Equity Partners to help our companies. So being agile is key. It's crucial that the systems can really adapt and cope with the pace of that data demand and growth. And finally, at the core of what we do is add value to our portfolio. That's our job. This adds a further dimension to the investment decisions and strategic priorities. So we always ask the question, will this support the growth of our companies? And there's a lot of similarities between the CFO role in an investment firm and that of our portfolio companies, such as data security, cybersecurity, etc.
Thanks so much, Tony. Edwin, coming to you, you liaise with, I'm sure, lots of CFOs. You've already mentioned one anecdote, engaging with a CFO over many years ago. Does everything that Tony has just mentioned, does that chime with you in terms of what you're hearing from others?
Leon, it certainly does. Tony touched on some very good points there. And just for a little background information, Intertrust recently conducted a global survey of over 200 global private capital CFOs, along with 100 different types of LPs. Out of that survey, some of the key points that came out was, yes, technology and data is very important, as Tony mentioned. And I'm sure Tony will agree with me that the saying that data is the new oil, well, it's only useful if you know what to do with it. Oil itself is useless unless you know how to disseminate it, enrich it, and refine it for it to be useful. And it's the same thing with data. Just having data doesn't necessarily mean that there's going to be enough transparency and enough governance of a fund or by the LPs. I recorded this reading yesterday regarding a very well-known religious group being in the news that they are not willing to endorse same-sex relationships, but yet one of their funds is invested in a film company that created a very famous film about a same-sex pop star. Now, without the data is there. The data is there, but it's not being fed up the chain. It's not being disseminated. It is not being seen by the LPs. I think that's also going to drive the technology. In our survey, over 24% of the global CFOs expect to substantially increase the technology spend. Now, having spent a budget on buying systems in my past guise as a head of fund accounting, I know the pain of choosing the right system, but I also know the pain of choosing the wrong type of infrastructure for that IT layer. So I think just recognizing the need for it is great. It's a positive first step. But for the CFO to move more into the digital age, they need to make the right choice now, because the pain of changing that 5 years later will be very, very painful.
Absolutely. And we'll come on a little bit more in a short while to how you resource all of this change in an efficient way, how you invest in it, to your point. LPs and LPs needs, requirements, demands for data have already been mentioned a few times. Perhaps, Tony, can I come back to you to expand on that a little bit? LPs' expectations have gone up year on year over time. What are those expectations, and how are they changing?
Sure, I suspect that the core demands will be very consistent across private equity and venture. Speaking from our own kind of, I suppose, personal experience within Scottish Equity Partners, I think the key areas are starting with is portfolio trading performance. That really is at the kind of heart of the systems that we have had in for some time. So how do we look at that? So we work closely with the portfolios in terms of them submitting through a system that we've put in place over the last few years. So a system called iLevel, which is a portfolio management tool and system that allows us to capture the information that they produce. And this is also key, designing a system that you can input information into once. We're not asking them to do anything different and put another burden onto them. But things like their core KPIs, how the business is performing, that all feeds in through to the fund performance outlook, which obviously we report back to our LPs on a regular basis. But I actually think our own data demands from our portfolio are probably higher than that of the demands of the LPs from our own data. Mm-hmm. I think the second area that's really accelerated, I would say, over the last 24 months is it's called ESG. You might have heard it as corporate social responsibility. It's actually all about responsible business practices. And there's a real kind of focus on this area now from LPs, but also from companies and acquirers and other investors into our company. So we look at areas of governance, of culture and society. So how are staff treated? How do companies interact within society, as well as ourselves? So we've seen a real acceleration of the recognition and importance of those responsible business practices and the link to very strong performance in businesses. And it's now seen as quite a key measurement of performance. I mean, there are LPs that actually are reluctant to invest in GPs unless there are certain criteria that are in place. So that is really something that I think if you're not on it, you should be. So for example, at Scottish Equity Partners, we have accreditation with the UNPRI. We also have an internal team now that is dedicated. We have 4 people from across the firm, which is also great in terms of diversity, that are responsible for overseeing and looking the whole investment life cycle of a portfolio business, through from diligence to post-investment through to exit. So we're really taking a lot of care in that area.
And just on that, Tony, do you put your own KPIs in place and so on? You have your own kind of measurements, etc.?
Yeah, it's a good question. So we've always done that. I think what we've not done is probably taken it to the level it should be at. So what we decided to do last year was actually get some external expertise alongside us to start shaping and forming a view on that. So somebody who ultimately had been doing this for some time. So we took that input, and I think it's back to Edwin's point that when you look at all of these things, whether it's a system or whatever, most of your time is spent up front deciding on what you're going to do with it and how you're going to shape something. So we took it very early on that we'd get somebody in to help us with that project of getting up and running. And then what we've ended up with is across the portfolio is we look at those three areas of governance, culture, and society, and within that, we actually look at individual elements within that we believe are responsible business practices for the business. What we're then able to do, of course, is the great thing is we can then share that information across the portfolio, not from a disclosure point of view, but we can share best practices. We can point to certain initiatives that companies have done and show the link between the performance, staff retention, talent recruitment, and all of those good things. I think the other areas that we get a lot of requests for are things like, well, really it's resilience, data resilience. So things like data integrity, cybersecurity, those kind of areas are key, of course, and they're built into our ESG data set that we capture on system. But I think the really interesting bit from all of that is obviously what's happened over the last year with COVID. It's actually driven or accelerated a lot of the change amongst the portfolio company, but also within SEP. And that kind of, how do we remotely work? How do we do deals remotely? How do we support our portfolio remotely? And how do we communicate internally with our colleagues to make sure that actually it's all joined up? So there's real close engagement with the portfolio, and there's actually a lot of new ways of communicating that we've invested in. So yeah, I mean, I think those are the key areas for us. Regulation and compliance is another. It's always been there, but it is also an area that's changing with the market, but also with the actual expansion of your LP base. So that's another area to look at. And generally, we have fixed reporting to our LPs, fixed in the sense that we will do quarterly updates for all of our companies. We will do annual AGMs on the fund performances. Actually, what we've also seen is during COVID, we've had more updates and more engagement with our LPs, which has actually kept them up to date with progress across the fund during this period, and also ad hoc meetings. I think that's the same with our portfolio companies as well, that we've been much closer to those businesses. So yeah, I mean, look, the demands are increasing, but actually it's a really exciting time for the CFOs at the heart of most of this to actually take this forward.
Completely agree. And as everyone will know, the BVCA has done a lot of work on ESG, and in many respects, we thought that ESG was clearly rising up the agenda more and more last year. That's going to become even more so as we look ahead to COP26 this year. And just on your point around the changes in working, cybersecurity, kind of distributed systems and so on, that does present all kinds of challenges. Edwin, there was a lot there in terms of information that is gathered from a GP's perspective for the GP's own use, but then reported on to LPs, from resilience to ESG and so on. Again, does that chime with what you're hearing from other CFOs?
It certainly does. And I think Tony made a very good point about different types of standard. You can have standard reporting, but ultimately, I think what we always advise our client is that there should always be one golden source of data. Especially during this time, we're all working remotely. You know, at Intertrust, we pride ourselves on the right use of technology, in that there's one golden source, and then there are additional IT systems that are modular, that's bolted on to provide additional reporting, whether it's ESG related, whether it's financial related, whether it's KPIs for portfolio companies. But ultimately, there has to be one golden source. What you don't want is to have left hand telling the right hand to repeat the same manual task of inputting the data. So I'm very happy to hear that Tony has set up the eye level where basically their portfolio companies are just doing things as if they're doing it normally, rather than having an additional layer of inputs. But what has been interesting from our survey as well is that we're seeing a difference between different countries' GP and the perception of what the LPs want. So from our survey, most UK, German, French, and Italian GPs are seeing an increased level of engagement from their LPs on ESG. They're getting more questions, they're getting more requests. I think what other GPs in other jurisdictions need to be aware of is that there are very few GPs that will only have one single set of LP from one single country. So therefore, the drive is more global now. As more countries come up the curve when it comes to the requirements of ESG, the perception of the right PR as well in the press, they will get that pressure not from one LP, but from multiple LPs. So therefore, again, the advice really is that plan for the worst and the best will come, right? Plan for everyone wanting that data so that when you set up the infrastructure, when you set up the IT interfaces, it's all there ready for the different types of LP that are out there.
Of course, and ESG is a strong value driver, as we know. Tony, we've talked about a lot, and all of this adds value as we discussed, and is so interesting. To your point, we have an industry that really pores over data and works out how best to use that data and apply it to create value. But that's all got to be resourced. You've got to invest in it. You've got to arrive at the right model. How do you go about thinking about that?
Yeah, that's a great question, Leon. We are data hungry, aren't we? And I also think a lot of the companies are too, depending on the sector. You take examples. We have a number of e-commerce businesses in the portfolio, and just the amount of live data that's required to make decisions in the business is phenomenal. They need to understand customer behavior, and they need to understand where they invest in marketing, when to turn it up, when to turn it down. And of course, as you pointed out, it's global. So there's this 24/7 need to be on top of the business all the time. I think for an investment firm, and speaking from experience in Scottish Equity Partners, it really depends on the size of the firm. I think everything has to be proportionate. But I do take Edwin's point. You make a great point that you build for the future, you do scale, because it's painful if you're having to constantly change systems, let alone update them. So I think there's different models, and then there needs to be an assessment of the risk and the opportunity. There needs to be a decision on ownership, as in what do we keep in-house, what do we outsource, or what do we do as a hybrid of the two. And then there's the economic question that goes alongside all of that, and of course talent. So who's going to do this at the end of the day? So more often than not, we would tend to use a combination, actually. So initially, if there's a new system that we're thinking about, there's often a project associated with that. So we will, like we do with ESG, we brought in that experience to work alongside dedicated team members within the organization. That's key, because I think you need ownership. And then basically what will happen after that, we will tend to engage for a longer term with that third party to offer some training and advice as we go along. But the key for us is that we try to lean towards in-house ownership and management. I think COVID's driven much more investment into things like cloud-based systems and distributed ledger systems. That's obvious, it's key, but actually we only are now understanding the benefits from that. So we can have all of our 40 team members working in 40 different locations, but working on the same deal. We can see live updates and changes. We can either do that through virtual data depositories, or we can use systems like iLevel and Affinity to track new deals. But these are the kind of areas that we've really focused and accelerated on over the last year. And I think that's really kind of helped. It's worked for us. And actually, if you think about it, what we are as a technology investor, this is in our DNA. So there's some really good, and I keep coming back to this, there's some really good sharing with our portfolio in terms of what they are doing, but also in reverse, what we are doing to help support them. So the technologies we focus on are things like how do we use the systems to portfolio manage and monitor. That's all about performance and keeping in touch. And for that, we use iLevel extensively. We've also adapted iLevel, and we've been able to use that to capture all of the ESG requirements that we've got as well. So there's not always a need for a new system because we're looking at a new area. And then on things like deal tracking and deal execution, we use a combination of things, you know, as I said, virtual data rooms, Affinity, etc. And we've also used various training and compliance software to help with the remote working. So all of those have worked really well. I think we've also found we can kind of beyond, as I've said, beyond investing in new systems, always think about, can you use the existing systems you have? Or when you're looking at a new system, can that system in the future be used to leverage off new data that you will introduce into the business, which is back to one of Edwin's points. So yeah, you know, look, we still retain in-house expertise. So talent's really key. You know, for me, I think all of this, this kind of introduction of innovation has actually made us look at the talent and the resource that we've got. And yes, alongside the investment in systems, we've brought on board some new people and some new talent that helped us achieve that. So it's worked well for us during COVID, all of those things.
Really important, and thanks for making a note of that talent point as well. Not all about the systems, as you mentioned. Edwin, again, coming back to you. What are you hearing from other CFOs in terms of systems, teams, and so on? How do you make this most efficient?
I would say most of them will have the same rationale as Tony, which is that you want to have control over the data. You want to have accountability within your investment team of the data. But what we're helping our clients with is really economy of scale. Are there areas where economy of scale actually helps with operating the fund, with operating the investments, rather than having it in-house? One example I give would be things like KYC and AML checks on the LPs. That really does bode well, having that economy of scale, because let's say Tony has a fund, and I'm just using you as an example, Tony, hope you don't mind, as a fund where an LP is in multiple vintages. Now, obviously there's economy of scale when it comes to doing KYC on that LP because that LP is in multiple vintages. But I think it's the same from our perspective. We will have clients that have the same LP across so many different funds, but also across different clients. So therefore the KYC burden is therefore far less on that LP themselves because they're just giving it once for all their investments in all those different client funds. And so therefore, when it comes to looking at what needs to be outsourced and what needs to be in-house, I think the most important question is what doesn't generate alpha for you as a GP? If it doesn't generate alpha, can you look at getting help to do that work? Because what generates alpha, I believe Tony's team should be fully accountable and responsible for that.
Absolutely, a great note actually for us to end on. Thank you so much to you both, Tony and Edwin. We've covered the changing role of the CFO, the importance of data to GPs, to portfolio companies in terms of sharing knowledge, and of course to LPs as well. We've talked about the system, the talent, the resourcing, and investing to get this all aligned and efficient in place. And thank you again both. We'll have an upcoming roundtable very soon focused on the same topic, which is for GPs, again with the support of Intertrust. Thank you, Edwin. That'll be on the 25th of March, so a good opportunity to have a bit more discussion around this topic. Following that, we have some other events that are coming up. an LPGP forum working together to improve diversity. We've actually just released the results of a recent survey on diversity and inclusion in partnership with Level 20. So please do look out for that too. It comes with a set of recommendations. And we have another webinar coming up, which we've titled Changing the Guard. You might wonder what that means. That refers to us, the transition that we have from one chair of the BVCA to the next. And Kerry Baldwin, managing partner of IQ Capital Partners, will be our next chair from the 1st of April. And Kerry's coming fresh with a lot of ideas and eager to help take the BVCA forwards. But in the meantime, thank you again, Tony and Edwin, for your time. I hope this has been useful for you all watching, and see you all again soon. Thank you.
Thank you, Leon, Edwin, and Tony, for an interesting and insightful discussion. And thank you, Intertrust Group, for sponsoring today's webinar. Thank you, our audience, for tuning in. And a reminder that if you've placed any questions in the chat, we'll answer them directly by email. A quick reminder before we sign off that you can watch all of our recorded content on demand via our website, including recent webinars on diversity and inclusion and reflections on the 2021 UK budget. All that's left for me to say is thank you again for tuning in, and I hope you enjoyed today's discussion. Goodbye.